Tax secret number 3 is hiring your kids. This is one that most people say they're going to do. They just never actually put it into place. And so I want to talk to you about actually implementing this and getting it into place because if you're a business owner, 9 times out of 10, your kids are doing something for you. You may have them shredding papers, you may have them mowing the lawn or something. If they're doing something in your business, don't treat it like a chore and you're paying an allowance for it. Actually hire them in the business because as their parent, you get the beautiful opportunity of not having to treat them like an employee and issuing W-2s and 1099s. As long as you're paying them under the standard deduction amount, you don't need to do that. They don't need to file taxes. It's in most states. We'll talk about that a little bit greater, but in most states, as long as you're paying them under the standard deduction amount, you're moving the money from your business bank account to your kid's bank account, but you got to have the right protocol in place to make this work and not get audited. I don't worry about audits. I'm just going to be honest with you. The biggest thing is if you get audited, you need to be able to CYA, cover your behind on it and make sure that you keep your deduction. If you've got all your ducks in a row, then the audit is the least of your worries, okay? So with this deduction, if you hire your kids, business owners who have children under 18 who perform legitimate tasks for the business, as long as you're paying them, you get to take this deduction in your business. And why does this help? Because you as a business owner are typically going to be taxed at a higher rate than your kids would. It's if their only income is what you're paying them and it's under the standard deduction amount and they don't need to file taxes, gravy, right? But we're going to talk about how do you accelerate this depreciation? How do you accelerate this deduction for your kids' behalf and your behalf too? But the other beautiful part about this deduction is your kids taking the income, you're reducing your taxable income because it's coming out of your business and you're being able to take that deduction. So if you're paying your kids a certain amount, and this year for 2024, as long as you're paying them under $13,850, that could be tax-free on the federal side. And then in 2025, the standard deduction went up to $15,000. So if you pay your kids wages up to $15,000 next year, you get to take that deduction in your business. And let's talk about what your kids can do with that, right? Here's my pro tip on this. Use a combination of the pay and the savings, and you're paying the kids. Let them do two things. A, keep a little dollars to pay for, maybe you're paying for private school, maybe you're paying for something along those lines. Part of that pay can go towards that, right? But take a big chunk of that, well, at least $6,500 for the year, right? And put that into a custodial Roth account for you, Roth IRA for your kids. So that money can grow tax-free. And if you start when they're young enough, let's say you start at age 7, by the time they're 18, they've got money that's just been growing tax-free for all of those years that they can pull out to pay for college, buy into real estate themselves. And if you want to, I have a cool strategy. I love layering strategies on top of each other. One of the other cool things about this is when they have this money sitting in this IRA and this Roth, since it's a Roth, is growing tax-free because you didn't get a tax deduction on it. This money, when they pull it out, is still tax-free, right? So if they're using this money, it can just keep sitting there growing and they can live off of the interest of it, right? But this is one way that you're not only reducing your tax liability, but you're increasing your child's wealth and ultimately the family's wealth, right? When the family grows, everybody grows, right? Thank you for watching. Don't forget to like, share, and subscribe.